Chesapeake Energy will be filing for bankruptcy there. We're seeing shares off more than 50% today. So what does it really mean for the energy names out U.S. shale producers here, and what oil sitting near $40 a barrel might mean for consistent pain in the oil space? So how are you reading through all this right now as bankruptcy becomes a very real risk for a lot of these energy companies?
Yeah, so I think that OPEC extending the cuts 1 month is a whole bunch of nothing. Really doesn't get us a lot more rope to, have a market recovery. And I think it just maybe forecasts a fall in a collapse in the floor in the price of oil if, when they stop extending these cuts kind of month by month. You've got to look at names like, Chesapeake is kind of on the rumor mill for, declaring bankruptcy. You've got Whiting and Diamond Offshore, names like that in bankruptcy. And then I think you've got especially other service companies like Neighbors, for instance, really on the precipice of, Calfrac on the Canadian exchange, really running out of rope and running out of liquidity. So if we don't have a major upturn in the price of oil soon, I think you're going to see a lot of oilfield services companies declare bankruptcy. And I think you're going to see a fair amount of medium-sized E&P companies or companies with very levered balance sheets like Apache, head for bankruptcy court protection.
Yeah, and I mean, we were talking about this with Stephen Schork on the show right before we got the official word from that OPEC Plus meeting on Saturday. And he had noted that Wall Street continues to love the oil bet here, even though there are a lot of what you're discussing issues when it comes to simple supply and demand. U.S. shale producers taking about 2 million barrels out of the market. But we've still noted, I mean, we're talking about refineries still consuming about 3 to 4 fewer barrels, causing a pinch point there on the demand side. So, I mean, when we talk about all of that, considering U.S. shale producers are free, unlike OPEC and some of these other groups around the world, free to come back onto the market with oil at $40, what does that say about how this basically will persist when we move forward with production maybe coming back online here in the U.S.?
Well, I think that's kind of a good string of commentary. Look, there's two basic camps right now. There's the camp that thinks we overcut, and America is opening up, demand is coming back. Brent's above 40. The export markets are fairly strong, and we're going to come out of this. And there's going to be a mini oil boom, mini supply shock near on the horizon. And then there's another camp that says, hey, look, cases are rising now for the virus in 10 states or 12 states or something. We're really looking at muted economic growth, and several sectors of the economy aren't going to come back. Oil demand right now, the IEA estimates are that demand is down about 13% from where it was last year. I think it's actually maybe down more like about 10%. I think the IEA is a lagging indicator of sorts, or has a lagging data set. But, I come down on the side of optimism that we're going to power through this, but I think we really just need more visibility. We're in a fog of war right now.